This sort of goes back to, I think we did a video at some point last year where I made the reference that there should be something in your portfolio at all times that you hate. You know, there should be also something that you love, something that's working at that point in time. But bonds have been something that I don't know if you hate it. I mean, they're not volatile, but yeah, it's true that they've gone nowhere for the last 5 years. Of course, you're getting interest payments, so you're getting something out of the deal, and you're also getting muted volatility across your portfolio, where stocks don't always go up, you know, regardless of what's happened the last 30 days. So I think the question is there still a place in the portfolio for bonds? And I think we've answered that exact question once a year for the last 5 years, because we've been in an epic bull market for equities. Yes, it's been very frustrating. You know, as interest rates have risen, you know, the middle of the curve and the end of the curve, you know, the longer dated treasuries have gone up in value, which puts downward pressure on bond prices. Should we enter another Fed hiking cycle? So going back to the previous question, if inflation does start roaring its head again and the Fed is forced to hike rates again, what happens to bonds? There's the theoretical possibility that a Fed hiking cycle would be bearish for stocks and bullish for bonds, which maybe doesn't make sense, you know, at first blush, because rising interest rates are supposed to be bad for bonds. But what we've seen in the last 5 years is that the yield curve has gone from deeply inverted to a little steeper. It's not steep by any means, but it's steeper than it's been. And if the Fed were to hike short-term interest rates in order to choke off inflation, what the byproduct would also be to slow growth, you could see that interest rates further out on the curve would actually go down. So you might have a re-inversion of the yield curve, which stocks probably wouldn't like, but longer-term bonds would like. So I think you're asking a question about whether bonds deserve a point in the portfolio at a time when, looking backwards, they have hurt you or not helped you as much as they're supposed to. But looking forwards, it might be a good time really to revisit your bond allocation and ask yourself if it's large enough.